Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include new strategic partnerships, my interview with Secure Insight's Andrew Liput and Halcyon's Kirk Donaldson on their integrated solution that combines borrower identity, income, and settlement agent verification, and why rates are gently declining for now. Today's podcast is brought to you by nCino, makers of the nCino Mortgage Suite for the modern mortgage lender. nCino Mortgage Suite's three core products, nCino Mortgage, nCino Incentive Compensation, and nCino Mortgage Analytics, unite the people, systems, and stages of the mortgage process into a seamless end-to-end solution embedded with data-driven insights and intelligent automation. See how nCino can support a homeownership journey that your borrowers and your team will love at nCino.com. I've received a few comments about how the industry is changing and in curious ways. There's some creative thinking out there. Along those lines, I received this note. Have you heard of a title company franchise where LOs and brokers keep title fees and own the revenue stream yourself? Yes, I think that person was talking about ProLiant settlement systems. Does it mean that you could have real estate agents, loan officers, and title officers working for one company? I don't know. Ask your attorney. Every lender has an attorney these days, right? UWM and Built announced a strategic partnership whereby UWM mortgage customers can earn valuable Built points with each on-time payment while accessing exclusive neighborhood benefits, creating an entirely new value proposition for both homeowners and independent mortgage brokers who serve them. Without much in the way of economic releases, U.S. Treasuries began the week quietly with modest strength in long bonds pushing the 30-year yield to its lowest level since early April, while the 2-year note remained largely unchanged. Markets also welcomed a dip in the secure overnight financing rate amid rising liquidity concerns. Despite dipping to 3.93% during Friday's session, 10-year yields failed to close last week below 4% and are expected to remain range-bound ahead of this Friday's September CPI release, which could determine whether yields finish the week with a 3 handle. The recent drop in premium, now at its lowest since April, suggests the market is looking past earlier bond bearish concerns when, with long-end yields retreating, there's renewed confidence in treasuries as an asset class heading into year-end. Headline risks around U.S.-China trade relations also linger. For today's interview, I want to welcome back to the show Secure Insight's Andrew Liput and Halcyon's Kirk Donaldson to talk about their integrated solution that combines borrower identity, income, and settlement agent verification into a single secure workflow, enhancing mortgage fraud prevention and compliance. Anecdotally, qualitatively, quantitatively, however you want to put it, do you talk about just how we're seeing a proliferation of fraud in this day and age?
There's two parts to that, right? And so like anything else, like information in general, are we getting better at detecting fraud? And so we have more instances of fraud where before, because of QC is historically been low in our business, whether that's through manual processes in the past, right? Where QCing 1, 2, 3, 4% of loans, right? Because it is time consuming and expensive. Or is it a dramatic expansion in fraud due to technology? And I think that it's both. And so I think that we are detecting more fraud. We're seeing more fraud because it is more, the data is readily available to check. I think that through Secure Insight and Halcyon, we are lowering the cost to QC loans. And so you are seeing more QC that'll naturally increase the numbers. But I do think that the release of data, whether through direct channels or nefarious, like Social Security numbers being released. So SSA had a massive breach. I can access almost everybody's Social Security number in the country. And so that does not help, right? And so that increases and encourages fraud. And so, I think it isn't binary, right? I think that you have a dual, causation in the numbers going up here, and we are seeing that result. It's also, people are becoming more aware of types of fraud, like occupancy, right? And so we have an occupancy, solution that we are working with the GSEs, FHFA, and that is completely technology based, right? We have access to resources that were never available in the past, coordinating those resources and being able to go out there and consolidate that data so that you could see how far someone works, their place of work is from the home that they're saying is their primary residence, and yet they have a 4.5 hour commute. It's on Zillow, right? I mean, it is one of those things that technology has helped us and very, very low cost to find that data out. And I think that one of the points that Andrew hasn't mentioned on Secure Insight is you have a history here. And so these aren't people that are Silicon Valley. We know better than you do. We have technology and we're going to stand it up. This is 15 years of experience in seeing trends and indicators of fraud that aren't, this is not a formula or some algorithm that they've necessarily written only. It is experience, right? And there is no substitution for experience when it comes to being able to pick out fraud trends, right?
Yeah, that's a good point. I mean, one of the things that we're proud of, and Kirk has alluded to it, is that myself and the other founders of Secure Insight, we're all mortgage industry people who had cut their teeth in the mortgage industry. I myself was a fraud investigator, worked with law enforcement, was involved in repurchases, make wholes, buybacks, all kinds of fraud investigations back in '08, '06 and '09 when that period and everything was falling apart. So, I've literally seen hundreds and hundreds of cases of different types of fraud and how it impacted lenders. And then we built the company, went and worked with a risk analyst at Lloyd's, and they had been, of course, getting all kinds of claims under the closing protection letter and under title insurance policies from fraud that took place. And they had all kinds of statistics, which we looked at, which helped us to figure out how we were going to address it. And so, to piggyback on what Kirk said, it is important to see the trends in the industry. I mean, fraud has always been here. The fraud we see today is the same fraud that was 10, 20 years ago. It's just that the fraudsters have better tools, right? The one area that we've seen a growth is wire fraud. And that is combined with the increased use in obviously email communications and the ability to convince people through phishing, hacking, spoofing, whaling, and all that they're talking to someone who is disguising themselves as someone that they're not. And so that has shown a tremendous increase, of course, and you see that in FBI fraud statistics, that wire fraud has just become a real bane in the industry. And used to be theft of funds at the closing table, right? Years ago it was the title agent or the attorney going to steal the funds. We see that less now. What we see is the funds being stolen electronically and being rerouted somewhere, and within like 24 hours, it's outside of the country. So we've seen that. The other thing is that, what we're all trying to do, right? There's no foolproof method to prevent fraud because fraudsters are always, looking for ways, and it's just no 100% solution. But what we're trying to do, and I think also what Halcyon is trying to do, if I can speak for them, is we're looking to change behavior, right? Kirk talked about, the QCing of files and things and kind of changing people's behavior. So when they look at data, they get the right data to help them to interpret what's going on and to slow down, to make changes, to sometimes say no, to sometimes say we have to, this is a red flag. So our solutions provide data, but it's also designed to change behaviors. And the behavior, is directly related to compliance and risk. And that's what we're trying to do. There's no foolproof method to prevent all fraud, but certainly our tools have been successful in making people change their behavior and look more carefully at what they're doing. I always say it's forcing them to kind of slow down, right? Slow down, look at the data. We're giving you this information. Once we give it to you, you then have to do something with it. I can't force people. I can show them reports saying someone is a high risk because they have this prior fraud case in their file, or they're not licensed, or they're not insured. If they choose to go ahead, they do so at their own risk, but at least now they're empowered with more information. And that's what Halcyon does as well. We're giving information that's valuable and looking to change behavior so that people are more focused on managing risk.
Andrew, the last time I saw you was at the Western Secondary, and there was talk of this strategic partnership with Halcyon and Kirk, and it's significant strategic partnership. So for people that might not be intimately familiar, maybe let's start there, and what is the partnership, the basis of it, the benefits, the goals, those sorts of things.
Yeah, Halcyon has been a track record of being in the data business, source of truth. We have a platform that not only vets individuals, but does a deep dive background with Andrew and his team at Secure Insight. We have expanded into the professional verification, anti-fraud. There is a tremendous amount of growth in fraud, wire fraud, professional fraud, and technology is a double-edged sword, as we all know, right? And so it has become easier to commit fraud. And if you're a bad person doing bad things, what we've tried to do is make a clear path that is easy for not just the borrower, but the professional community. And while being very conscious of price, right? And so making this as easy with all of our integrations. Halcyon has crossed the 450 client of the largest lenders out there. And so using that base to be able to kind of spread out and defray costs, get this access for Secure Insight and for Halcyon into a broader market to not, I don't want to say gouge, but to minimize the price to do this instead of seeing how many dollars we can extract, because it's just good for the industry. It's good for the industry. Lower cost means adoption. Adoption means that we can significantly lower the cases of fraud that are out there. And that way everybody wins.
Look, between the two of us, we focus on the two key areas of fraud, right? One is borrower fraud, which that includes, straw buyers, people who aren't what they say they are, income fraud, asset fraud, all that kind of stuff that is a nightmare for lenders. And Halcyon is laser focused on making sure that income, assets, tax information, all that stuff is accurate, and the people are who they say they are. The other area, though, that is significant for lenders is the professional fraud. And when we talk about professional fraud, the most significant professional fraud surrounds the closing table, right? Because you have attorneys, title agents, escrow officers. They're the only professional who have access to the lender's funds, a borrower's personal and financial information, as well as the collateral security documents, right? So we're kind of focused on that side. Halcyon's focused on their side. The combined solution really provides a tremendous collaboration. And as Kirk indicated, it allows us to gain access to an introduction to their clients. It allows us to introduce Halcyon to our clients because we both feel that each other's products will benefit them. And so by working together, we can provide this joint collaborative solution that will remain very affordable, that is impactful, and will make a decision in the key areas where fraud is being not only historically has been located, but is continuing to grow, as Kirk has indicated, through advances in technology and AI.
Let me step back for a minute here, because in general, whether it's because of AI or access to data, we're seeing fraud expand. And so that makes a fraud prevention platform that much more important. Let's talk information for a second, because I know something you're very proud of is the repository of data that you have. Massive amounts of data, tens of thousands of profiles on professionals, can you talk just about the robust nature of what you're sitting on and what it allows you to do?
That's a result of 14 years of hard work and labor intensive analysis to create that. And the exciting thing for us is, Kirk's built a company that is less labor intensive. So I hate to speak for him and he'll correct me, but they're using state-of-the-art technology. They've got an amazing technology team over there. I just am blown away every time I talk to them. And they have, their analytics and the AI that they use, allows them to instantaneously gather information to assess risk. A lot of what we did at the beginning was so labor intensive. I mean, we had a lot of employees getting information, making phone calls, looking at data on the internet, everything wasn't in the same place. And it took us a long time to build that database. But one of the exciting things one of the things we're very excited about is that partnering with Halcyon gives us the opportunity to piggyback off of their amazing technology and do an even better job, not only of collecting data, but monitoring it and updating it and making sure it's the best data available at any given time.
Yeah, Robbie, one of the things that we're, going to talk about at the MBA Annual this week is that we have, I wasn't always in the mortgage industry. And so we have a few former data people out of the government and a few others. We have 2,600 data points on 240 million Americans. And so we haven't utilized that data. We haven't to date. And what we are releasing and it's a symbiotic relationship with Andrew's team is that that data is very, very powerful. And if we are able to take, the exact data that you see at, say, an Experian, for example, combined with cell phone records, where we just gave our technology that this product a burner phone cell number, and out of that burner phone cell number, we were able to identify the person, identify all their utilities, identify the last places they've lived for 5 years, their utility bills, social security number, date of birth, their payment history, right? We have a psychological profile that is very, very unique, and being able to overlay a psychological profile and propensity to pay. And the way that you put this together by masking most of that data, but then giving a red light, green light, yellow light, right? And saying there are things to investigate here, right? Multiple addresses at the same time, but one cell phone, which, indicates that these are not your primary residences, even though you've taken out loans claiming that. We ran for, I guess they're the 5th largest lender in the nation. We ran files. We had someone that was convicted 3 times of arson. You want to lend money to that person? And so you have to be very, very careful in what you release, even to lenders that are your clients, even, with someone signing off on use of this information. We sit in a very unique industry in that people are coming to us because, and whether it's mortgage or whether it's personal loans or credit cards, they want your product, right? And they will go through the hell that is applying for a mortgage to get that done, and so they will sign off on your sharing of information. And so having that much of a robust, I mean, you're talking about billions and billions of being able to take a combination of that data and getting a real robust not only profile of someone but their history, right? And being able to look into their past.
Before I let you two go today, I'd heard that you're in talks with the GSEs, FHFA, direct data access with the IRS. It's pretty neat stuff you're doing. Anything you can fill listeners in on about those conversations with government?
Yeah. So what we've been trying to do and what we've continued to do over the last few years is that, this direct source of data, so source of truth, and if you build it in the right way, you take out the manual components, right? You lessen human intervention. You make that a commodity and commoditize what we're doing. That data is readily available, and that data historically has been in the hands of very few companies, which allows them to charge almost as much as they want, right? And in doing so, right, you're increasing underwriting costs. Their solution to loan volumes going down is to double their price so that their revenue isn't hurt, right? Because they're either public or they have shareholders and board members to answer to. What we've done is not only made the data access reliable, source of truth, no fat fingering, less human intervention, but we've also commoditized it, right? And so our anti-fraud for individuals is $2, not $80, $2. We are going to commoditize that entire business, just like we did with the tax transcript business, just like we are doing with the income calculation business. And if you look at, the depth, breadth, the amount of historic data that Andrew and Secure Insight has, they could be charging 4 or 5 times what they're charging now. That isn't the point here. The point here is that we're going to make this industry more secure, right? We're going to make this data accessible, right? And we're going to be able to eliminate as much fraud as we possibly can.
My final thought on it would be, because I agree with everything that Kirk said, we're talking here a lot about providing tools for lenders to prevent fraud, but ultimately the financial harm trickles down to the consumer, right? So everything we're doing is also protecting consumers. The GSEs, the government agencies, the regulators, they like that, right? Because ultimately it's the consumer that bears the brunt of it in the single most largest financial transaction of their lives. And so by giving these tools to lenders, we also help them protect their customers, save their reputation, and really do something that has a lasting impact on the lives of millions of people. And so we're excited to be part of Halcyon's tool and to be working with them strategically together. We think it's a great fit. We know it's a great fit, and we're very excited about the prospects of the future.
Andrew makes a very good point. And so one of the takeaways is by no means are we saying that everybody is out there committing fraud, right? But it only takes a few bad actors, right? A few bad apples spoil the bunch. It really is that way in our industry because when it does happen, like occupancy fraud, for example, you get cohorts, you get people working together or an individual that is doing this several times. The financial impact is so significant that it raises the prices across the board. So you have good people doing the right thing significantly impacted because a few people are bad actors in the business and in their applications. And so that is really what we're trying to do.
Access, accuracy, efficiency, and affordability. Those are the four things I think most lenders are looking for. So the access part, this is one of the key reasons we're partnering with Halcyon because they have some great access points through Encompass and others. So we can combine with them to make it more easily available to folks. Although we also have an independent API and we're doing other things. From the accuracy standpoint, the record speaks for itself. So what type of data is it? There's a lot of data out there. A lot of it's outdated. A lot of it's irrelevant. The two of us, what we shared together is that we focused on incredibly relevant, incredibly accurate data, which helps lenders make better decision making about who their partners are, who their customers are, and how to avoid fraud losses. The efficiency part is, okay, if you're going to adopt a solution, you don't want it to disrupt your workflow, right? It has to easily fit into your workflow. You don't want it to create extra steps to create problems for consumers or pushback and all that. So our solutions independently and together allow for a tremendous amount of efficiency, seamless integration and existing workflow. People don't really have to do much they're already doing. They're just getting more important information to help them make better decisions. And then the best part, the thing that most people care about is affordability, right? How much is it? Are you charging outrageous onboarding fees? Are you charging, minimums? Is it an enormous commitment from a contract standpoint? Or are you really going in at the best available price to make sure that you get buy-in? Because what good is it to have all these tools if they're so darn expensive, people don't want to adopt them?
Gentlemen, I really appreciate the time doing some really cool things here, and wish you the best of luck, and hopefully we'll see you soon.
Thank you.
Robbie, thank you so
Pleasure.
much.
Today's economic calendar includes Philadelphia Fed non-manufacturing for October, Redbook same-store sales, remarks from Fed Governor Waller, and more earnings from Wall Street. Today is also Class D 48 hours for MBS. We begin Tuesday with agency MBS prices slightly improved from Monday's close on no substantive news. The 2-year yielding 3.46, and the 10-year yielding 3.98 after closing yesterday at 3.99%. Let's wrap up with a joke and some housekeeping. The Pope was making a widely publicized and controversial visit to Las Vegas. His publicity advisors warned him that the trip would be fraught with risks, but the holy man insisted that the gambling capital of the world was exactly the kind of place that the church should be trying to spread its message. After a long flight, the Pope stepped off the plane to find himself face-to-face with a horde of television cameras and newspaper journalists. One eager young news hound thrust a microphone at the Pope and asked, "Pope, what is your opinion of the large numbers of brothels in the city?" Mindful of the warnings he'd received from his advisors, he thought carefully for a second and replied tactfully, "Are there any brothels in the city?" The next morning, he was distraught to see the newspaper's headline, which read, "Pope's first question, are there any brothels in the city?" Thanks again to nCino for sponsoring this week's podcast. nCino's Net Mortgage Suite for the modern mortgage lender includes 3 core products: nCino Mortgage, nCino Incentive Compensation, and nCino Mortgage Analytics, uniting the people, systems, and stages of the mortgage process into a seamless end-to-end solution embedded with data-driven insights and intelligent automation. To learn more, visit nCino.com.